Imagine you're a monkey perched on a slender vine, gazing at two tree houses. One cozy den you can rent month to month, the other, a grand tree house you'd own forever if you can just gather enough bananas to build it. The den offers flexibility, swing out whenever you like, but every month your bananas disappear into someone else's pouch. The treehouse demands a hefty down payment and decades of banana deliveries, but offers a place to call your own. So, which path leads to a fuller banana stash, renting versus buying? It's a debate as old as the jungle itself, and in 2025, with interest vines rising, housing fruit growing expensive, and remote vines reshaping demand, the answer has never been more complex. Today on Primate Finance 101, let's peel back the layers of renting and buying, explore the advantages and pitfalls of each, and help you decide which vine to swing on for your best financial future. Renting versus buying. What's the better financial move today? In case you're new here, Primate Finance is our fun monkey-brained way of simplifying complex economics because even serious finance can be bananas. Renting, the flexible vine lease. Lower upfront bananas. Renting requires a small banana bundle as a security deposit and monthly rent, leaving more fruit in your pouch for other ventures. Maintenance free. If the roof leaks or termites nibble your landlord's troop handles, repairs no extra banana tapping. Mobility and freedom. Want to chase new opportunities in another jungle? Renters can relocate quickly, ending the lease and swinging off to fresh vines. But beware, no equity growth. Every banana you pay goes to the landlord. You're not building any banana tree. Rent increases. Jungle inflation can drive up rent over time, eating away at your budget. Limited control. Want to decorate your den? You need permission from your landlord. No autonomous banana painting. Buying, planting your own banana treehouse. Equity building. Mortgage payments convert rent vines into ownership vines. Each payment thickens your equity trunk. Predictable payments. With a fixed-rate mortgage, your banana payments remain consistent, insulating you from rent hikes. Creative freedom. Paint walls, build balconies, or plant exotic banana trees. Your rules, your design. But consider, high upfront cost, down payment, closing fees, and moving expenses demand a large banana stash up front. Maintenance responsibilities. Roof leaks, termite infestations, and vine pruning fall on you. Be prepared to tap extra bananas. Illiquidity and commitment. Selling a treehouse takes time and costs bananas. If you need to move fast, you might get stuck. Comparing vines. When it comes to upfront costs, renting only requires a low deposit, while buying a home demands a much larger down payment. In terms of equity growth, renters build no ownership stake, whereas homeowners gradually grow their equity over time as they pay down their mortgage. Looking at mobility, renters enjoy high flexibility to move on short notice. Homeowners, by contrast, face far less freedom to relocate. For monthly payment, predictability, rent can rise whenever the landlord increases it, but a fixed-rate mortgage locks in the same payment for the life of the loan. Finally, maintenance responsibilities fall to the landlord when you rent. But if you own, every repair and upkeep task is yours to handle. Here's the jungle secret. The smarter move depends on your personal vines, how long you plan to stay, your banana reserves, and your risk appetite. 1. Time horizon. If you plan to hang around the same canopy for 7+ years, buying usually pays off. Equity you build and potential appreciation can outpace rent inflation. If you foresee big changes, career swings, family moves, renting gives you agility to chase new branches. 2. Banana reserves. Buying demands a hefty down payment. 20% of home value is common. If you don't have that banana stash yet, save more or consider first-time buyer programs. Grant vines low down payment loans. Renting requires less upfront, so you can invest extra bananas in a diversified portfolio of index fund groves that may yield higher returns. 3. Market conditions. In jungles where property prices skyrocket, buying can capture appreciation. But in zones where fruit rot's, price declines, owners can face losses. Renters ride out market dips without risking banana equity, but miss out on gains when housing markets flourish. 4. Cost comparison. Calculate your rent equivalent ratio, monthly rent relative to home price rent divided by price. A ratio above 5% suggests renting might be cheaper. Below 5%, buying might be more cost-effective. Factor in maintenance, 1 to 2% of home value annually, property taxes, and homeowner insurance. These hidden banana costs can tilt the scales. 5. Emotional vines. Owning a treehouse brings pride, stability, and control, a psychological benefit that goes beyond bananas. Renting offers less commitment, lower stress over repairs, and more freedom, a mental banana worth its weight. A hybrid strategy can also work: rent in high-cost jungles while saving aggressively, then buy when markets cool or you have more banana reserves. Or buy in a growing canopy, then sublet spare vines to cover costs. Deciding between renting and buying isn't a one-size-fits-all vine. It's about matching your financial goals, timeline, and canopy conditions. Key takeaways. Renting offers flexibility, low upfront costs, and freedom from maintenance, perfect for short-term swings. Buying builds equity locks in predictable payments and provides creative control, ideal for long-term growth. Evaluate your time horizon, banana reserves, market conditions, and emotional preferences to pick the right path. Consider hybrid approaches: rent now, buy later, or buy and rent out to cover mortgage vines. So, which vine will you swing on? Are you ready to build equity or keep your options open? Drop it in the comments and share your decision team. Add your renter or team.your homeowner. Like if this video helped clarify your path. Subscribe to Primate Finance 101 for weekly jungle smart money tips and share with a fellow monkey weighing their housing options. Because at Primate Finance 101, we turn serious finance into fun, memorable adventures, one banana at a time. Swing safe, think long-term, and see you in the next episode. Channel Primate Finance 101, mission making complex finance, fun, visual, and unforgettable through jungle logic and banana wisdom.